right, Chris with Go Prime. Let's talk about the federal funds rate and mortgage rates. Okay, the news comes out. Interest rates dropped. The Fed dropped the rates. What does that mean, Chris?
That's for a bank-to-bank loan, okay? So typically that doesn't have a direct effect on mortgage rates. However, they typically trend in that same pattern, okay? So if the Fed announces a 0.25 reduction Fed rate, that doesn't automatically mean that your mortgage rate went from 6% down to 5.75. It doesn't work that way. We saw yesterday when they finally announced, the interest rates actually went up a little bit. So we got repricing from all of our investors saying, hey, pricing's gotten worse. We're sitting out new rates.
Okay.
So it's not a direct correlation. Fed rates is not the same thing as mortgage rates.
Okay, so bank to bank, and then it's Fed. Who borrows mortgages? Like, what's that relation?
Mortgages are more based off the 10-year treasury, bonds, and the economy. So if you're starting to see stuff come out in the economy, that can have a drastic effect on what mortgage rates are doing, because it can push people into buying bonds, or it can push people out and sell bonds.
Okay.
So it's not an exact science, but typically when Fed rates drop, mortgage rates will go in that pattern, but not at the breakneck speed.
Okay. All right.
So just like yesterday, Fed rates went down, mortgage rates trickled up a little bit. But I think that the pattern you'll see will eventually, Fed rate, mortgage rates will go in the same direction.
Okay, but don't get excited the day it happens and call Chris and say you're ready to refinance.
Yeah, but that's what happens. I spend the majority of the day on the phone talking to people about rates and why they're just hadn't adjusted. It's not the same thing. But luckily, they do trend in the same direction. So hopefully we get better rates sooner than that.
Woo! Go economy.